Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. First and foremost, we've seen a lot of volatility in the overall market recently. Clients who attend our regular Tuesday webinar or watch the recording know exactly where those lines in the sand are for the overall market, since we make that calculation every week. And so, clients, we will be talking about this next Tuesday, so make sure that you attend the webinar. If you're not yet a client and are interested in learning more about this methodology, which can help you in times of extreme uncertainty as they are today, then send us an email at info@strategicanalysis.ca and tell us about yourself and your investment journey. SVA is not for everyone, but for some it is the missing piece in their investment puzzle. Now, when I turn to the FANGs themselves, 7 of the 8 stocks have either inflected down from key support resistance breakpoints or have broken support to the downside. In other words, with a single exception, almost all the FANGs look to be heading lower. So, the FANGs look to be effectively saying one thing: we are going lower. But the 2 key U.S. market indices are saying, oh, maybe we are and maybe we're not. Who wants to know? Well, of course, we all do. But we do not yet have a clear market signal to work with. In sum, remember that to get a confirmed sell signal from the overall U.S. market, we need to have a sell signal from both the S&P and the NASDAQ. One is not enough to take action, and we've only got one so far. Anyway, right now, we really need to take a closer look at those FANGs and what's been going on. But as always, before I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, well, let's start off with the one FANG which has not given me a sell signal, and that is Alphabet. Okay, and you can see here that Alphabet has been holding pretty nicely at its MSG price, its mid-super growth price, which is 5.5 times book value. Now, this is in sharp contrast with what happened in the past, what I call sloppy trading, pointing out lower prices. Sloppy trading here at its MSG price back in 2022, forecasting lower prices, and then sloppy trading again, which I thought was telling me we were going to get one further breakpoint decline. Didn't happen, however, and this time around, the stock is holding nicely at its MSG price. So far, so good. In contrast, Amazon had been holding and holding and holding at its bubble price, that's 7.4 times book, and has let go, and I have to say has now given us a confirmed sell signal. Apple, well, has given us a sell signal about 3 weeks ago when it broke its HB6, which is 33 times book value, and I expect lower prices ahead here. NVIDIA, interesting stock. You know, the HB6, which was 33 times book value, had been the highest valuation that the stock had ever reached in the previous 23 years of the history that we have. And when it broke out here, I thought that there was a chance that maybe that NVIDIA was sort of trying to tell us that it wanted to move on from strength to strength. And indeed, for a while, it kind of held in that channel of the HB6, 33, and the HB7, 44 times book. But very recently has broken down. And this, despite a powerful increase in the earnings forecast and the fair market value. So we are watching the stock with interest, but I think we are definitely heading lower. Netflix, well, you remember what I've been saying about Netflix for some time, don't you? I didn't understand what on earth it was doing getting above its bubble price in the first place on that recover from way, way, way down at its super growth price. Well, it held there and held there and held there, kind of broke down, tried to break, but it's now looking much lower, and I expect lower prices ahead, as I had actually for some period of time. Meta tried to get up to its bubble price, but it failed. Took another run at it, but failed again, and it looks very much as if the stock is going to head lower. Microsoft, a similar kind of story. The stock perfectly hit its HB3, and we got a sell signal then. Remember that? Dropped down, rallied back again to its HB2, which is 12 times book. Sloppy trading around its HB1, which is 9.5 times book, and I thought the stock was going to give us a nice low here at its bubble price, but it didn't. It has only rallied one breakpoint, however, has been unable to break higher, and small wonder. Look at the trend of the fair market value there, really going nowhere. And so the stock has set back, and I have been waiting for it to come back at least to its HB1, the 9.5 times book. And the real question is that it? Tesla was or is an interesting case in point. We bought them beautifully at its bubble price, had a 2.5 breakpoint move, set back a breakpoint to its HB1 9.5 times book, a 2.5 breakpoint move, set back to its HB2 or 12 times book, and I thought that might be a possibility that the stock might do as it had done twice before and move higher. But that has not been the case, and the stock is now sitting back. Incidentally, Tesla will be reporting on Monday. Now, to summarize what's happened recently, Alphabet continues to hold fast at its mid-growth price. That's 5.5, mid-super growth price. That's 5.5 times book. If you want to find a contrary opinion on the future direction of both the stock and the market compared to the rest of the FANGs, this is the one. However, the shares are right there, and they must hold now. In comparison with just about everybody else, Alphabet seems to be a steal. It has a very strong balance sheet. It's trading just above its MSG price, 5.5 times book, and a mere 20% higher than its own fair market value. Cheap by most FANG standards. The company has its own set of issues with the U.S. Department of Justice these days, but what's a big company for these days if not to sue them for some real or imagined wrong? Amazon has broken bubble price support, 7.4 times book, despite that nicely and recently tilted uptrend in its fair market value measure. We now have our 3% 5-day rule of thumb signal in place. So I have to say that a sell signal is confirmed. That means that Amazon is joining NVIDIA, which broke support 10 days ago, along with Apple, Meta, and Netflix, all of which have broken support in recent weeks. As far as Microsoft is concerned, I have been saying for weeks since it hit its HB2, that's 12.5 times book, that I think that it wants to drop to its HB1 price, that's 9.5 times book, and it is nearly there. I do not like to say worse. But again, longer-term subscribers know that I had had my heart set on Microsoft reaching down to its bubble price before this whole rally got underway months ago. There may be a modest trade to be had at its HB1 price. This only leaves me with Tesla, which had mounted a nice recovery up to its HB3, or 16 times book. And I was sort of rooting for it to break out and go even higher. But the HB3 price has been it, and one more FANG now needs to find support at its next lower breakpoint. This company may be offering the best-selling electrical vehicle, but if you have been following the news, it's plain to see that the Chinese are flooding the market with much cheaper electrical vehicles. Worse, every auto manufacturer seems to be trying to get a solid toehold in that market. In closing, I must keep reminding you again as to what Jerome Powell said at Jackson Hole. As far as the economy is concerned, the U.S. Federal Reserve Board is navigating by the stars under cloudy skies. For sure, it is clear that the same goes for the stock market. No panic yet, but don't get too complacent. For now, this has been Ross Healy, Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at Nickel & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you